All right. It's Rick Wilson again with Martin Associates. I guess we'll go ahead and get started. So hello, everyone. Thanks for taking your time out the day to join us this afternoon. Hopefully everybody is safe and then your businesses are getting back to normal. We're excited to welcome back our partners at Avalara this afternoon. We've worked with them for many years and they're a great partner with us. Today's discussion will revolve around some of the key mid-year tax changes we have. Things like some extended tax relief that are still going on from the pandemic, new nexus laws, et cetera. So a few housekeeping items before we get going here. So we'll have this presentation recorded and we're gonna email everybody that registered and attended and send those out to you. So you can have a link. If you have questions, go ahead and enter them in the Q&A or chat, and then we'll tend to those at the end of the session here. I think that's it on the housekeeping. Today from Avalara, we're lucky to have with us Parker Wilson. He'll be doing the main presentation here. We cleared it up. We don't think there's any relation.
Long lost cousin.
Long lost cousin. So he's with Avalara. So I think you're ready to start. So Parker, go ahead and take it away.
Fantastic. Thank you very much, Rick. Appreciate you having us. Looking forward to talking through some of these topics today. So as far as kind of what we're looking to accomplish here and kind of run through is just a couple different items, is talking about economic nexus, kind of what it means, why it matters. Also wanted to just talk through, I know there's some questions around how to determine what that is and what specifically impacts your business. Some COVID-19 and kind of its influence into now from 2020 into 2021. Some new obligations that result from increased marketplace sales. How to choose the right tax technology for your business, and then like Rick mentioned, going to do kind of a live Q&A at the end. If a question pops up, feel free to put that in the chat, and we'll certainly get to it. All right, the first polling question here. I think it's gonna be launched. There we go.
So can you see that, Parker, or?
Yes, I can.
Yeah.
I guess I'll enter. I don't know.
Yeah, so go ahead and everybody go ahead and answer and we'll see what it looks like.
There we go. Looks like we're looking at the results here. A lot of in-house staff. Not many outsourced to CPAs. 20% don't know. I wonder if that was just me or how many other folks said that. All right, moving right along here. Jump to the next. Oh, one too many. So basically what we're seeing is that states are responding to kind of these budget reductions by cracking down on economic nexus laws. We're also seeing them increase the amount of auditors they have on staff, and then also looking deeper into the actual taxing of specific products, right? So these are kind of some important things that you would want to keep abreast of, make sure that you're understanding. And then kind of the last one, but not least, is we're seeing kind of rates increase to generate more revenue. So what economic nexus means and why it matters, right? One of the big things that we're understanding and seeing as far as businesses is that 61% of nexus is actually still triggered by physical presence, right? So what I want to do is kind of differentiate between the two, right? Economic nexus was another layer of complexity that was added prior to the physical presence piece. And so economic nexus is selling into a certain dollar, selling into a state at a certain dollar value or a certain number of transactions. And so with that, thinking about how much you're selling into a state and also looking at it's not only retail sales. A lot of states are also looking at gross sales, meaning if you sell for wholesale or you sell to distributors or things of that nature. That's what we're seeing as far as complexity for businesses when looking at these economic nexus thresholds. So the sales tax landscape, it is complex and changing all the time. Like I already mentioned, different states have different rules with regards to economic nexus, as well as those notice and reporting provisions. So those rules are kind of always changing. And the court case ruling back in 2018 between South Dakota, that's really what kind of set an additional precedent. What a lot of folks forget is the one from South Dakota's older brother, North Dakota, and Quilcorp, where it set precedent as far as physical presence creating activities. And so that's what we see here on this screen. So if you're doing anything along these lines here, I'll read a few off that we see most. Using your own trucks to deliver product, housing product in third-party warehouses, and salespeople, right? That's what a lot of people forget is a salesperson physically traveling, and these may be pre-COVID, right? I know with the widespread virus, not many people are traveling, they're not attending trade shows, right? We're seeing some of that come back, but this is prior to, right? This was before even the Wayfair court case ruling in 2018. So if you had any of these activities prior, that should be a red flag for you and your finance department as far as thinking, hey, we may have some liability here that we need to solve. And so that's one of the things that Avalara can certainly help you with. And we'll talk briefly later about some services that we offer to help with kind of some of these nexus creating activities and help you and your business understand where you have or have created an obligation and potentially should be following the rules and laws of these particular states. So going back to economic nexus, looking at some of these thresholds, as you can see here on the right, have some of the differentiation between these thresholds. North Dakota, $100,000 in taxable sales as well as 200 transactions. Kansas, there's still a battle going on between the House and the Senate around what their legislation really is. I forget if it was the House or the Senate tried to pass just one transaction into the state would trigger an obligation. The other side of that coin was fighting it. So there's a battle internally with Kansas. We're going to come out with some more details later as it unfolds. California and Texas are the largest, $500,000 in sales. Connecticut, $250,000 in sales and 200 retail sales. Similarly, Missouri and Alabama, $250,000 in sales. And then Georgia follows suit kind of with North Dakota, 100,000 in sales or 200 retail sales. I think we got another polling question coming up here. Kind of just looking and getting some detail around how many states has your business triggered nexus in, kind of based on the short discussion that we've just talked through there. So I think we got a polling question coming up here shortly for you.
I'm not sure how to get to the second poll question.
Little technical difficulties here,
yes,
folks.
I am.
Stand by.
Oh, here it is. Figured it out. All right, you should be able to see it now.
Perfect. So we got just my home state, 1 to 10 states, 11 to 20 states, and 21 or more states. And again, something to think about while you're filling this out. If you don't know, or maybe you need help with determining this, we have some services and we can certainly talk about that. Also, feel free to reach out to your specific individual at Martin & Associates and they can get you in contact with the right individuals over at Avalara. It may be myself, it may be a colleague of mine, but we're definitely happy to talk through that and just have a conversation. It doesn't have to be salesy. It can be extremely kind of conversational as well as kind of just chatting through what makes the most sense for you. All right, I'm going to go 21 plus states here. I got a big business. And remember, this is not economic nexus only, right? Thinking of salespeople traveling, housing products, maybe you just purchased or acquired a company that has locations. All of those things can kind of create the complexity around where you should have an obligation.
The results should be viewable, I believe.
Yep, we got them.
All right. Good detail there. So how to determine if your business is impacted, right? Kind of been chatting about this briefly. We have a couple different options. One is just a basic assessment on our website. It really is high level. It's looking at only economic nexus. So something to think about, or if maybe you do have physical presence creating activities like we kind of walked through, that middle option is probably going to be better suited. And as always, if you have a sales and local tax CPA that you work with, we suggest you leveraging them. We're here as kind of an add-on or an additional. More than likely, we already work with that sales and local tax expert, and either they'll suggest you work with us, or they have those services they can provide, and we'll work in conjunction with them as far as the software solution to follow. As it relates that middle option, you see there's two different pricing components to them. One is a 12-month look back at economic nexus as well as physical presence creating activities. We have a detailed questionnaire. If you may be registered with the state, some of the similar questions are asked. Then the next option, that $8,500, that is our premium sales tax risk assessment. And that includes a full look back dating all the way back to your first nexus creating activity, whether it was a salesperson in 2005 or economic nexus in 2019. We'll go all the way back. We'll take your transactional detail, we'll run it through our tax engine, and we'll spit out exactly how much sales tax you potentially owe, and then help you solve that with additional services. So once you figure out nexus, then the question becomes not only how to calculate it properly, but how are you going to file and remit it in these new states? So the filing of the returns may be low dollar amounts, but what we found is that there can be fines and fees associated to not filing. So let's say you're a reseller, or you sell to distributors only and collect resale certificates. You may be sitting there thinking, well, my liability is minimal. The caveat to that would be you have to prove to the state why you were exempt. And if you're not registered in the state and you don't have an exemption certificate on file, technically you would be on the hook for that sales tax, right? Don't shoot the messenger here. I just want to make sure we're providing education and detail around that. Certainly can have a deeper conversation if that is the case. But things to think about too are when filing and managing the filing is the deadlines. Are you doing county, city, and outlet reporting? Are there any local filings or home rule, maybe in Louisiana or Alabama, as far as those parishes and different jurisdictions? So breaking all that out, the aggregation of information, right? Maybe you have a retail POS, maybe you have an ERP or some sort of additional billing system, as well as an e-commerce site, right? Getting all that information together in one place, that's where Avalara can maybe step in and connect to these different places where you're doing billing or any information of that sorts, and compile it into either one report that you can use to file on your own, or we can take it a step further and actually do that filing for you, where we guarantee to file on time. We'll also handle any notices. And then if you're part of the SST program or the SST, which it's actually my next slide, we will actually handle and manage that audit for you because we have a partnership with those states. So I think that's a good segue here into SST. So what SST is a conglomerate of 24 states that have come together to unify and make sales tax simplified, right, or streamlined. And so as long as you are a volunteer status member, the benefits will include the following, right? We have uniform definitions and rules directly from the state. We can register you in those states at no additional cost. We can do the tax calculations within the SST states at no cost. Free prep and filing SST states, right? See that F word a lot there that us salespeople are not as friendly with, but technically, yes, it is free to you, the consumer, because the states are actually paying for it on the back end as far as a percentage of the sales to the state. And that big one down there at the bottom, right? Audit protection, right? Because we have a partnership with these green states, we can go directly to them on your behalf and solve any potential issues that arise and make sure that it is correct. Because Avalara is SST certified or a CSP, certified service provider, you may hear it that way. There are some hoops or rules that we must follow that the SST team put together. And so if that is something that maybe you are interested in, we can certainly get that material and detail to you as far as kind of what that means. Other caveats to the voluntary status are basically a remote seller, right? So no fixed place of business for more than 30 days, no more than $50,000 of payroll or property. So think if you have a physical location in one of these states, it doesn't mean that you can't leverage the program. It just means that you won't get the services for free, right? So maybe that is one and the same for you, but technically you'll still be able to use the SST program, but the services themselves will not be free because you are not a voluntary or do not have voluntary status. So details around exemption certificates. I know this is a big sticking point that we run into as far as discussing with people that deal with resellers, distributors, sell wholesale. And so wanted to just to make sure we talk through that. So not alone distributors, and we put kind of these exemption certificates up in the rafters and they start collecting dust, right? You talk to the company and they have kind of file folders, or I've even spoken with some folks and they have them in shoe boxes. That's one way to do it, certainly. But as far as when your nexus increases, this generally does not become scalable. Not only does it not become scalable, you also don't have the ability to report on these paper documents. So getting them into some sort of tool that helps manage kind of the entire life cycle of them, we found is extremely beneficial for our customers. They now have the ability to know when they expire. They now have the ability to run reports on them and gather them quickly as far as maybe having an audit, right? God forbid. But if they did have to deal with that, generally can get the auditor out of their hair very quickly by getting the documents that they need, printing them out, putting that auditor in a very, very hot room and making them look through that giant stack of papers. So as far as leveraging kind of a tax technology and understanding kind of what's right for you, again, definitely want to leverage the individuals that you work with over at Martin Associates and get with the right folks here at Avalara if you are interested. But what we found is helping folks go from dealing with this manually or hiring a new person, things of that nature. Our software does not take sick days. There are no errors, right, as long as it's set up properly. So taking that human error out of it, generally what we found is we're able to save time, create efficiencies, repeatable processes. So if the person that's doing it today goes on vacation or something happens to them, right? Unfortunately, that does happen, or they want to retire or leave. how are you going to manage that after that, right? After that person leaves. Those are the type of things to think about as far as future-proofing your business. And so those are kind of some of the things that folks leverage and realize why outsourcing is beneficial for them. Sales tax audits are not fun, right? We've run into many companies that have dealt with this. Again, that SST, we will help in a potential audit in those states. Outside of those states, we have the solutions and automation set up so you can manage and deal with this audit easily, efficiently, pull the proper data, get the right information to them. It's all comprised and compiled within the Avalara admin console, and so you can get that detail back to them. And as you see here on the screen, 56% of companies have found the cost of a sales tax audit to be potentially over $50,000. One story that comes up to mind is I was working with a company out of Texas. Texas's exemption certificates don't expire. They had a great process of managing and keeping up with them. Unfortunately, during that process, one document fell through the cracks, ended up costing them $25,000 just for that one exemption certificate. So those are things to think about and keep abreast of. So like we chatted about, Nexus is kind of the most important and first piece as it comes to figuring out where you have these obligations, potentially how big your problem is, or maybe some pitfalls as far as the research that you've already done or have done. Then dealing with the product taxability in those states, right? Is my product taxable? Is the customer I'm selling to, are they taxable? Making sure that you assign the proper jurisdictions to the particular customer you're selling to. So Colorado we like to use because it's extremely complex and convoluted. Maybe the product is taxable in the state of Colorado, but not in the city of Denver. So ensuring that you have that right information and are charging it properly. Managing the documentation from your particular customers, ensuring that you have that valid certificate on file. Also dealing with the state and local prep and filing, right? Managing all of the documentation from the different sources, having one source of truth and filing that with the proper jurisdictions. And then as it comes up, right, being able to manage and deal with an audit as they come up. These are just kind of this pinwheel. We like to show most folks when they think of Avalara, they only think of the AvaTax module, right? The calculations, pinpointing that address on a map, pulling in state, city, county, any special local stadium or transit taxes that may apply. It does happen. We wanted to also show the additional services that we offer, right? The returns piece kind of comes naturally because we always have all of the information based on charging the proper sales tax. So we're able to file those returns in an automated fashion for you. Also the exemption certificates, right, which we've talked about. Something that we've acquired businesses over the years. One of those is businesslicenses.com. They are now an Avalara company. Not only can we get you registered in a state, but let's say you have a fleet of trucks that you have to get serviced and you need licenses on annually. We actually have a software to help get those for you. The fiscal representation, as far as filing those returns, that's a big piece as far as ensuring the filing is correct and managing all of the different jurisdictions. So you only cut one check to Avalara, we do the filings. Then more recently, if you've heard of the company TTR or Transactional Tax Resources, Avalara has also acquired them. And now we have even more content than we had before. In addition to, we have what I like to call the sales tax Google. So instead of going to Google and typing in a specific sales tax question, we have a solution that will pull up and reference specific statutes, as well as you can have direct access to an expert, and they guarantee a turnaround time of 24 hours if you have a very difficult question that maybe the solution wasn't able to provide or you needed additional details around. Here is a quote from a corporate controller over at Pecan, I believe. We learned some things about our Arizona tax returns after Avalara started filing them for us, how they use location codes versus how we had been using them. And then whenever we've seen a discrepancy in a tax rate, Avatax has turned out to be correct, which surprised him pleasantly, right? And kind of just goes back to leveraging the automation through not only the filing component, but also the calculation engine. So kind of going back to the Nexus piece of it, these are kind of the options. I know I already chatted about this again, but wanted to share this with you and show this again. We're here to help kind of as little or as much as you like. So please leverage us, like I mentioned. Definitely get with your Martin and Associates individual. They'll bring us in as needed. Again, it can be just a consultation, right? We can just have a conversation talking about your business. If it makes sense, we can certainly put together some pricing options for our solution. Or if you just want sales tax advice, I'm not a CPA or a tax attorney, but coming up in February, I've been at Avalara for 9 years, so have a lot of expertise that I can potentially share. You just can't take it as sales tax advice. So your favorite part, some questions and answers. I know we kind of put together a lot of detail here for you, but feel free to start putting some questions in there. Happy to answer those live for you, get some details. Feel free to start putting those in.
All right, thanks, Parker, for going through all that. Learned a few things there. Thank you.
Absolutely, happy to do it.
Let's see. So one question that came up. So you were talking about the SST, so that's the streamlined sales tax. So what is the eligibility, I guess is what the question is. I mean, how do you determine that, like a company?
Yeah, absolutely. So there's kind of 4 requirements to be a volunteer status, right? Again, I know I kind of mentioned this during the discussion. It's not that you will not be able to leverage the program. It's just the services will not be free if you are an involuntary status. And so what that is are these 4 kind of pieces. One is a fixed place of business for more than 30 days. So if you're physically there in the state, as far as having a location, that would exclude you from the free services, right? Still could be part of the program. Another one is less than $50,000 of payroll or property, right? So you would need to have less than $50,000. So think if you have a specific employee in my home state of North Carolina, you pay them more than $50,000, you would not be able to take advantage of the free services. One is 25%. So this is kind of for some of the smaller businesses, but 25% of total property or payroll in a state. And we can certainly provide some more detail there, but it's based on your business activities and where you physically are located.
All right. There's another one here. I know you were talking about the exemption certificates. Do you recommend requesting a sales tax exemption certificate each year for those that you know are already resale customers? So I assume if you've already have one, but how often should they be updated, I guess is the question.
Yeah, absolutely. So great question. Unfortunately, it's state specific. So Florida and Washington, they require one every year. Like I mentioned, Texas, they do not have an expiration date. So there is no expiration date. What we suggest and what some companies have done is within our tool, you can set it up to where the expiration date is 3, 4, or 5 years out, because in Texas, let's say you have a certificate on file, the company changes names, they change addresses, or the individual that signed that document is no longer at the company, it makes that certificate invalid. So it's like not even having one on file. So we would suggest 3, 4, or 5 years as far as an expiration date. And then in the states that actually have an expiration date, which some do have 3 to 4, the tool itself will actually know that based on that document.
Right.
And it'll tell you within 30, 60, or 90 days out, depending on how often you want to know about it. And you can actually start a brand new campaign within the tool and get new certificates, kind of a glorified email blast out to those folks as far as gathering and getting a new certificate. And then there's no lapse in compliance as far as having one on file.
Okay. Gotcha. Thanks. There, I guess this is kind of a more of a generic question. What states have you seen that are being more aggressive in going after businesses?
Yeah, certainly. I don't think it would be more aggressive. I think it would be some states have higher penalty rates, like Ohio and Pennsylvania. As far as states getting more aggressive, as you can imagine, California, we caught wind they're hiring more auditors. Colorado, they're actually having folks that are state employees go shopping on folks' websites and see if people are charging tax in Colorado, and that's giving them kind of a list. Other things, like if you're doing marketplace sales through Amazon, Amazon has provided detail through court orders to some of the states as far as people that have inventory in their warehouse. So they already have that documentation in detail. I know back in, I think it was either 17 or 18, they were actually going out some of these higher sellers, and now they still have that data in detail. So they're figuring out what they want to do with it. So those are things you want to be careful with.
Okay. Yeah. So I heard Ohio in there when you first started out. So
yeah, Ohio, they have a really high penalty rate. I think it's like 50%. So as an example, let's say you have Nexus, you haven't registered. You potentially would have a very high penalty for the sales either you should have charged tax on or that you don't have an exemption certificate present for.
Okay. All right. So this one is about determining nexus. I mean, I don't know how obvious this is, but maybe there's a fine. So should you use the bill to or ship to address for determining economic nexus?
Great question. Yeah, this comes up a lot. It's based on the ship to address.
Yeah.
Just like sales tax. Now, the caveat to that would be California and Texas. So let me stop it there. It's based on ship to address.
Yeah.
As far as the calculations, there are some states that are what they call origin based. And that would mean that you would need to charge the tax based on where it originated from if it's within the same state. Illinois is a good example of that.
Gotcha. Okay. And then it looks like this is the last one in the list that I had. So it's about, so our shipping charges taxed. I don't know if there's fine points to that or not. I think in some places they are.
Yeah, you got it. So each state, unfortunately, again, is a little bit different on how they tax freight or shipping, and how you designate it can also determine the taxability. So shipping and handling, things of that nature. If you use your own trucks to deliver, if you use a DHL, those are the type of things that could potentially change the taxability of the shipping. And so internally within Avalara, we have specific tax codes that you would map your specific SKU or item of that is shipping. And based on that, we know the taxability of it in all the states, Canada, and some other countries. I think it's like 100 other countries as well. So knowing the taxability of it is extremely important, and keeping up to date with that is very hard. So leveraging an automation tool that bolts right into your ERP system will kind of save that hassle of you looking it up and dealing with it.
Yeah, right. Yeah, that's the beauty of the AvaTax there. Yep.
Exactly.
All right, that's all I had. So those are some good questions there. I guess we can wrap it up.
Fantastic. Well, hey, everyone, thank you so much for joining. Hopefully you got a couple of good tidbits there. Again, if you have any questions, feel free to reach out to the folks over at Martin and Associates. Yep. Like I mentioned, they can get with the right folks here at Avalara. it might be me. So happy to work with anyone that has some specific questions or maybe is interested in putting some pricing together for our automation solution.
Gotcha. Yep. So just reach out to your Martin Associates account manager and we should be able to help. So, okay, we'll go ahead and wrap up. Thanks a lot, Parker.
Fantastic. Thanks for having me, Rick.
Good stuff. And thanks everybody who attended. We appreciate your time. And like I said, we'll be sending out the link to the recording and that type of thing. So everybody have a good day and talk to you later. Thanks. Bye.
Great. Talk soon.